Hey everybody, we have Justin Cambra on today, a full-time investor and Keller Williams agent that I met at the One Rental at a Time podcast, and he's going to tell us a little bit about how it is being an agent and investor. He now owns 43 units and 115 doors, so I think he's going to have some valuable things to share with us here. Welcome aboard, Justin.
Hey, Paul. Thanks for having me on. Excited to share with your followers the content, and glad we got to meet here just a couple weeks ago in Vegas at the One Rental at a Time event.
Yes, definitely. That was the best meetup I've ever been to or conference I've been to. So many great people and like-minded people together.
Yeah, I think that was the first time I went to one where it felt like everyone's in it. Like the speakers were just people hanging out
Yeah.
versus it's normally like the people on the stage are like kind of back away and everybody in the audience is their own thing. This was just everybody was intermixed. It was pretty cool.
Yeah, even one of the speakers I talked to all day, well, a good chunk of Saturday, and I didn't even know he was a speaker until I saw him on stage Sunday. So,
Right.
but yeah, let's jump into this. So, as you have a lot of units now, I'm guessing private money or creative ways to structure your deals outside of bank lending is a problem, or you've had people have some issues with that. So tell me a little bit about how you've used private money to your advantage.
Yeah. So for those that are out there, and when you start with the first or second property, you generally have that money.
Right.
Over time, as an investor, you're going to want to buy more, and it's guaranteed you're going to run out of money. And so there's as you buy more, you evolve as an investor to help continue that growth. And that's really what I've done. Is the first 19 I funded. And just for some scale of reference, a lot of these were 17, 18, 19, 80-ish K for a duplex in the Midwest. So 15 to 20K down. So it wasn't like hundreds of thousands of dollars, but each of them was like, say, 20K for down. So then as I continued to grow, I started doing partnerships. Partnerships help bring some money in to get some deals. Then I got into creative financing. But back to your point on the specifically private money, lately what I've been able to do is bring in private money to do per projects. So private money comes in, I buy the property, I fix it up, I get long-term debt, I pay that money back plus interest. So I've done one like that. And then the other one I did was another for a flip. Instead of a long-term hold, it was just a flip. And so I get the deal. I explain what the deal terms are. If they like it, they lend me the money, and that's the private money. I I then get a hard money with that to take down the purchase and the rehab. Once the project's done, sell it, pay back the hard money, pay back the private money lender.
Oh, so you are doing burrs in today's market. I'm hearing burrs are dead in today's market. How are you able to pull that off?
So it depends on where you're at. In the
Yeah.
Midwest, you can do you there is potential for the burr if you get the right property. It's not like they're everywhere. The one that I did was in January of 23. So technically, it's not in today's market. But in Seattle, and usually what I'm doing or helping clients do in Seattle is what I call the two-step burr, because there is no burrs in Seattle unless you are great at off-market deals and you just get that perfect deal, which is not for the average investor. So you have to do what I'm calling a two-step. You have to buy the property, fix it up in the front, and then in Seattle, you can do a detached accessory dwelling unit, a DADU. That costs around 350, 400. You can sell it for 6 to 800 depending on the area. And then you can burr the DADU. Sell the front in a perfect world, you break even on the front house and you burr on the back. So step one is the front, step two is the back. That's how you do a two-step burr. That's really the only thing that I can see working in today's.
All right. So let's backtrack a little. You said you're investing in the Midwest, but you live in Seattle. So let's tell the audience a little bit about you and where you're from. So,
Yeah, I'm from Seattle area, so live literally right next to the airport.
okay.
And I'm still in my same original house hack from 2016. I still live in a one bedroom. I do a medium term rental below, and then rent the parking lot out because I'm close to the airport. So
Awesome.
I started local. which I always recommend. First one is easiest one, lowest down, house hack. So then I bought my second property in Eastern Washington because I couldn't find cash flow in Seattle. And then after Eastern Washington, I couldn't find cash flow through Bigger Pockets. I heard about Milwaukee. That's how I got into Milwaukee. Then I heard about Detroit. So I bought some in Detroit. And then most recently, at the end of last year, 2023, I got into Des Moines, Iowa as well.
Okay. So quite a few markets, you're spread out. Um, are you having any issues with multiple different markets and having issues being a little bit too spread out?
Yes, 100%. The irony is like, you know, I was a couple minutes late to this meeting because I've got problems in multiple states all at the same time. And so trying to solve them all, if it was all in one state, most likely it'd be one property manager. But I have one per state. And then in Washington, I have three because I have medium term property manager, I have a short term property manager, and a long term. Each of them do different things in different areas. So I'm dealing with six PMs across 115 rental units. There's always something going on. So, yes. And that is why I'm looking at scaling down, meaning it's kind of scaling down to scale up, if that makes sense, where I'm selling the smaller ones off, the duplexes through fourplexes. I'd rather sell those and then get one like 10plex. So it's just easier for like a property manager to manage one building, and there's efficiency of time, efficiency of spend, maintenance, all that kind of stuff. So I'm trying to trade up in 2024.
All right. So there's multiple different strategies I could see you using to trade up. Um, but you're probably still going to need a little bit of money. So getting back to private
Yes.
money lending, what are some things that you see as very important things when it comes to looking for private money? Like if you are a borrower, what should you have ready if you're looking for funds from a private money lender?
For best is to be very diligent on your financials. So know everything about what you already have before you're going to buy or borrow more. So if you already have a portfolio, know what your existing loan balances are, what the cash flow is, what the ARV or the current market value of it is, how much cash you have on hand. And in today's world as well, is you need to start building your credibility on social media. So, like what I do is like I take pictures of myself at the property when I'm buying it and when I'm selling it with sellers, with lenders, showing how I make money, how people who lend to me make money, such that when they're looking at my information, they feel comfortable from a financial aspect and that they know, like, and trust me. Because the know, like, and trust is actually more important than the returns for some of these people.
Yeah, 100%. But everything that you do on social media, it's a free platform to advertise yourself. That personal brand's important. So,
100%. Yeah.
yeah. So outside, next, what would be another thing that you're looking for? Deal specific. So, say you locked in a property that you want to, you want to buy, and you're going to bring hard money from the beginning part. The first 75, 80%, or maybe 100%, depending on your hard money lender. How do
Yep.
you tackle bringing a private money lender in on the back end of that?
Yep. So let me just give you a real world example
Great.
that I
Yes.
just did this one actually about a year ago. And, for those agents out there, here's something you can do with your clients. A friend of mine wanted to get into investing and said, "Hey, this property was way overpriced and it's been coming down. You should buy this property." And at the time, there were some health issues in the family to where they just didn't have the time. And I go, "Well, you can either buy it and I'll be your agent. You can bring the money and we can joint venture, or you can lend me the money and I'll do the whole deal and just pay you a return." Based on their time commitment, they chose option three and said, "Hey, let me give you the money. I bought the property, knowing that was the down. The private money was the down. I then got the other, I think it was 80% from the private or the hard money lender, and so I was able to get into that deal for actually no dollars. And better yet, I got paid a agent commission because I was an agent for my own deal. So I ended up getting paid 30 or 15,000 to buy the property. So that's like a perfect world if you're an agent, how you can structure these deals.
Gotcha. Now, where did the rehab money come from that? Was that also from your lender?
Exactly. From the
From your
not the
private
private,
money?
but the hard money.
Hard
So the
money.
hard money, you build the budget, obviously the purchase price, you build the budget, you make sure that with the ARV it's hitting the right margin structure, one for yourself, but two to make the hard money comfortable. And then that's how you are able to proceed because they you have to tell them exactly what you're going to spend it on, and
Right.
whatever you put in there, that's what you spend it on. So if you didn't put anything for roof and something happens to the roof, now you've got to come out of pocket for the roof because your scope of work is only the stuff that you can borrow against with the hard money.
Okay. So with hard money though, I'm thinking you probably need something to get you to that first draw, right? They usually don't want to
Yes.
give you money before you did work. So where does that come from?
Yeah. So great question. And that's what I didn't learn until after I did a deal. And that's usually how I learn.
Yeah.
I'm like, hey, I want to do this. And then I get into it and then I'm like, I learn. It's kind of painful at times, but I learn just what you said. Yeah, I got the deal and I have the money sitting there, but I need to kick off the work, right? So I was funding the working capital. So let's just say it's 20,000. I go then put 10,000 in for, I'm just say it's demos 10,000. I pay the 10,000, the demo work gets done. I call up the hard money lender and it's like, hey, draw, I need a draw request. They go out. If I had 10,000 on the budget for the demo and I had spent it and it's done, they check that off. Within like 1 to 2 days, then I get a wire for the 10,000. So the money's there to borrow, but you have to front it and then get it back.
Yeah.
So it's kind of like, you go to the grocery store and they're like, hey, you'll get $1 rebate. Well, yeah, you had to buy it, submit the coupon, then you get the rebate. So it's kind of the same thing. So you got to be factoring in either A, you have reserves, or B, increase the amount that you want to borrow from the private money lender such that it has that floating or that working capital that you need.
Yeah, and you brought this back to that scope of work. The hard money lender is going to want to see everything you do to the property. Now, what's really nice though is you show that to your private money lender as well. I mean, they're going to want to see that too, right? So, they're going to
Yeah,
want to
the
know what you're
private
doing to the property because they need to know how they're getting their money back.
Right. So private money lenders, you generally already know them. They know you,
Yeah.
right? My first private money lender asked me if I had any projects. That's the perfect world, right? But if you don't, you need to be giving them that information and being above board and acting as if they are a third party that you don't know. So what I do, even the person that asked me, I created a PowerPoint. Here's who I am. Here's what the project is. Here's what my plan is. Here's why you need the money. Here's how much money you make. Here's the timeline. And then I have contingencies in there. Hey, if this doesn't happen, then this. And then how are they protected? Usually it's a second lien position on another property, cross collateralizing. So even though they may be your friends, it is best to put all this in writing up front because like projects take time. They have overruns. They change orders and all that stuff. If you have something you're working off of out of the gate, both you and the private money lender are in the same boat of what's going on, and then you can keep them up to date on where you're at in that project.
Yeah, so you're mentioning that. It from my experience, and I'm probably from yours too, but you could let me know. It's a lot easier to get all these things in writing and have a plan up front, especially when everything's good, so that if something does go bad, you already have a plan for that. Um, because we all know that it doesn't matter if you're friends, you know each other, or you don't know the person at all that's lending you money. It could be a challenge to get something in place once something's already going bad. So
100%. And the easiest way to get private money is from who you already borrowed from. So make it a great experience. They make money. It's easy for them. They will lend you more money.
yeah,
And it's just easy for them because they don't have to analyze somebody else. get to know, like, and trust somebody else if you can keep their money working for them.
So how many times on the deals that you've had so far have you borrowed private money?
Mhm. I think it's four
Okay.
with private money. And then, because a lot of the stuff I do is creative financing.
Yeah.
So technically it's private money, but I'm borrowing from the seller.
Right.
Uh, so, but in terms of true straight private money, oh, I take that back. I forgot about two. I have six.
Okay.
There's two that I did in the past, but now I'm more actively doing it on more deals that are um, transactional, meaning I'm getting in and I'm going to get out in a set time.
All right. So with these deals, have you yourself ever been late on any of them?
Oh, yes.
Yeah.
And the way the deal is structured, it worked for both parties. Yes, I got to extend, but it's not free.
Yeah.
So the private money lender had, in this specific one, because it's the first time working with them, had built in a structure. I had a window. If it goes past the window, I have three extensions, but it's 1 point per month, right? I won't ever do that again, but because I was just learning as to go, and I was like, it shouldn't be an issue, but I ran into an issue. So, and then even after those 3 months, I needed one more month. So then I had to come back. I had to pay him the interest um, in order for him to extend one more month. So everything's negotiable as long as you keep them up to date and you operate the plan. When I finally paid them off, they made 18%. So instead of making the original 12%, they made 18%. So
Right.
they're happy they got 18%. They did nothing. Well, they had the money, they lent it to me. And then on my side, I'm happy. I was able to with no money out of pocket, you know, set up a whole 1031 exchange and process that through and, basically not have to use my own capital.
Gotcha. Yeah. I mean, it's really good to have reserves, I would say, because when you're falling behind, that money has to come from somewhere. And your lenders aren't going to want to give you more money if you're broke and having problems. But at the same time, it's a double-edged sword because they want their money back. But so like in your case, you had all these contingencies already put in place for these lenders. Um, I can't be guaranteed, but I mean, as a lender, you're gonna feel weird and not feel too good about it, even if it is going back in place. Were there any issues where your lenders were really on you in these 3 months, or was your communication so good that they still felt good lending with you?
One of them, yes, because, well, two of them. And it comes down to the the communication and follow up. The first one was actually a relative, and they they were in a situation where they actually needed the money now,
Hmm.
right? And so
Yeah.
then now there's contention. They want to use it versus you're trying to use it, right? And the second one I did was in the same boat, and it was just that this person needed it like right now. So basically, I had to pay him off like 2 weeks before I closed, which way he would have got paid. But timing was of the essence. So I actually closed earlier, or actually I gave them money earlier than the close, so they're happy and such that I can do more deals with them in the future.
Yeah. And so it sounds like you're using private money very smart. You have reserves, so worst case scenario, you can pay them off because I'm sure they had to come from your pocket, right? You didn't bring in another private money lender for 2 weeks, right?
Correct.
Yeah.
Yeah. In that scenario, I had money sitting on the sideline. And what I like to do is have, when I'm borrowing other people's money, like that's a relationship, right? And that's a credibility between us, but that's street cred as well, right? Because like I don't want to not pay somebody back, and especially in today's world, because like I have them do videos with me, pictures with me on social media, so I want to have reserves in the unfortunate case that I need to extend or they need the money earlier. That okay, we can wipe that out. Wipe it out meaning I have money, we give it to them, cancel it, they get their money back. So now the private money loan is over.
Gotcha. Yeah. I think a lot of people miss on that point that you just said. A lot of people are borrowing private money and they hear all of this stuff on social media about doing deals with no money out of your pocket. That doesn't mean don't have
Right.
your own money and don't have money in reserves to bail yourself out. You can do deals without money out of your pocket, with no money out of your pocket, but
Right.
it gets a lot more risky because most projects don't go to plan.
Oh, 100%.
Yeah.
Even like I just bought a house a month, 2 months ago with zero out of pocket. I just took the note over. But then I had like 2,500 in repairs and then 1 month that took to get to the tenant to get in there. So I had a mortgage payment. So I was about 5K cash in on a zero down deal, if that makes sense. So
Yeah.
you're right.
Yeah.
One is the acquisition. Two is then the maintenance and operations and stabilization.
Yeah.
That's where you start getting these incremental, you know, cash you suck is what I call it, where you have to pay money to get you to where you can start making the money.
Gotcha. So you've had 6 times you've borrowed private money. How many of those times have been a repeat lender?
Two. Well, there's one lady that has two.
Okay, cool. So yeah, you're it's still pretty new as far as borrowing private money. You haven't done it a lot of time, but like you said, somebody's willing to come back to you and lend you money again because you've done right by them in the first time. If you give
Right.
somebody a bad experience, they're not going to want to lend you money again. So
Exactly. Yeah. And I'm always trying to figure out more ways to get more private money. So, like for example, I'm working on right now is like um, I have some loans that are coming due, which are on balloons on commercial, where instead of me going to get a loan and then my assumption in 24 rates drop, I get another loan. Instead of two large fees to pay the bank, why don't I pay somebody slightly higher than market private money with low fees for 12 to 24 months? And then that way I can get it's conceptually like bridge. So I'm doing that on one, and then there's another one where I have private money at a high rate, but now the project's stabilized. The the rehab is all done. There's a tenant in there. I just haven't got long-term financing because I don't want to pay these double fees. So I'm trying to find, hey, can I get another private money lender instead of 12%, bring somebody in at 8%? The 12% is going to be happy because they got their money back plus a 12%. If I can find a new person that wants 8% for their money on a stabilized asset, first position, they're happy. Then I'm happy because then I can drop the rate by 4%. So that's something I'm actively working on right now.
awesome. Okay, so what other creative strategies have you been doing to get some of these properties and get them funded?
Yeah. So we've been talking about private money lending and, you know, there's multiple ways to set it up. Some of it is, you know, hey, I want to lend you money. You just give them the money. Um, Not recommended, because there's no security for the other person. So what I'm doing is securitizing it against another property. And so, yes, it's private money lending, but it's securitized against a separate property. So if property A, I need to borrow money to fix it up, property B that has equity, I'd attach that, depends on the state, a note or a mortgage against that property so that they have collateral. So that way they're covered. So that's main way of private money. And what was the original question again?
So it's just let's cover some other creative strategies
Oh,
that you've used to acquire some properties.
yeah. So I'm super big into creative financing. So I would say 25, maybe a third of what I own is creative. And that can look like historically I've done land contracts, at least with the option of purchase, subject to what are some of the other ones? I've done a wraparound mortgage. So those are your four main creative financing ones. And then there's straight seller financing if they own it outright. I've done that. So there's five different ways, and there's probably more that I don't know about yet.
Yeah.
But I'm once I learn a new way, I'm like, okay, let me just go do one. Because then you really learn like how to do it. Because like each one of these has nuances. Who
Yeah.
has the deed? Who pays for insurance? Um, and who gets the depreciation
Yeah.
is in there as well. So creative financing can be great, but you have to understand it so that you protect the seller, protect yourself. And I'm going through and learning this like literally real time.
Yeah.
Because I'm just starting to do more of these creative deal structures and learning as I go. And it's been challenging and fun, but this is like how you scale.
Yeah.
You've got to stretch yourself out, right? Because if I only use my money, I wouldn't have bought a property all of 23 because I left corporate world in 2022. And then, yes, I'm an agent. I make money as an agent, but lenders, bankers want 2 years of W-2, generally
Yeah.
speaking. Um, could you get DSCR with less than that? Yes. Um, you have to get the deal that has enough DSCR, enough payments to cover.
Ratios. Yeah. Gotta get your ratios
Exactly.
right.
So,
Yeah.
so by not having like, next year or by the end of 24, I'll have 2 years and it's not as big of a deal because then I can get easier bank financing. But between when I left Amazon and the 2 years of tax returns, this creative financing, whether it's private money to help buy or creative just one-on-one with the seller, that's how I'm able to continue to buy.
All right. So you touched on a lot of different strategies you've used, and there's no way we have enough time to go over every one of them. But I think the one that you can touch on more, that is probably pretty useful in today's market, I would say is a wraparound.
Right.
Let's touch on that a little bit. What like run us through an example, not even an example, your real life deal you've done on that.
So the real life deal on that, the funny thing is I did a wraparound mortgage, but I didn't know I was doing it.
Yeah.
And it wasn't my fault. So let me explain. I bought this property off Craigslist from a guy. It was a sixplex burr that I was doing in 20, I think it was 2021, and it was pretty beat up. And so I was like, hey, there's a lot of work here. So let's figure out how we can do the seller financing. We negotiate everything, like 25K down. I think it was a 200K purchase. I got the 25K from a private money lender, right? But I didn't get enough for the rehab. Um, and then what ended up happening, we went to the title company and said, hey, here's the contract. Well, then the title company goes, well, who's Mr. Crawford? And I go, I have no idea who Mr. Crawford is. Well, the seller was like, oh, well, I have a mortgage with Mr. Crawford. Well, we need to talk to Mr. Crawford. And I'm like, why? And they're like, well, that's just how we do it. I'm like, okay. Well, the seller didn't want to talk to him. Or no, the seller called Mr. Crawford, and then Crawford goes, let me talk to him. So, so now I've got to talk to not the seller, but the seller's note holder. And I have to talk to him, tell him who I am, establish what I'm going to do at the property, why I'm credible, and why he should approve this deal. He has no incentive to do it except for if I do it right, when I'm done and I have the takeout loan, I pay off the seller, which pays off Mr. Crawford. By the end of the conversation, I was trying to buy one of his other properties. So the key here is like, if you educate yourself, you know what you're doing, you have a plan in place, you can kind of figure your way out of all these problems. But that's how I ended up getting into wraparound mortgage. So seller won for simple numbers, 100K loan between Mr. Crawford and seller. So Mr. Crawford had 100K with this guy. I then over here took a 200K loan wrapped around, which is a higher payment to the seller than the seller's payment to Mr. Crawford. So that's why they call it a wraparound. So conceptually, like if I'm paying $1,000, that $1,000 is greater than, let's just say it's $500 a month for the between the other guy. So, and to keep it simple, we just did what the term is called a mirror wrap. So I just matched the interest rate because it was supposed to be a short-term project. I think it was like 9%, just to keep it simple. That it's 9% from me to the seller, and then from seller to Mr. Crawford, that's 9%. Just kind of simplify things.
Gotcha. Yes, that does help. And a lot of people are using those wraps now to like do subject to wraps where, they're adding a couple percentage points on top so that they're making money every month, even though they don't even have any ownership of the property anymore. So,
Right.
but yeah,
Wow, subject to wrap. I'd have to literally wrap my head around how that works. I
there's
love
a
the
lot of
concept.
that going on. Yeah.
I love the concept, but that's interesting.
Yeah, think if you can get a deal locked under contract, one of these mortgages that has a 3% mortgage, and you're able to work in 3% for yourself, you're still under market. Somebody else might still be interested in that product. So,
Right, right.
I mean,
No,
those
yeah,
are,
that does make sense. Yeah, in this scenario, it was 9%, so obviously you weren't going to
yeah,
get
that
the
wasn't going to work.
minus.
That's more with the mortgages that are from 3, 4 years ago that people have to get out of, but don't really have equity in their property. So
Yeah.
I am seeing a lot of that right now. So,
Mm.
um, let's wrap this up though. This has been great, but Justin, where can people find you if they want to talk to you about all the creative things that you're doing?
Awesome. Yeah. So the main area is on Instagram. There's two. Me personally, it's under at the number 4, JC Cambra. And my other more, I'm here today under the brand W2 to Freedom. So if you go at W2 to Freedom on Instagram, you can find it there. So I'll be doing more YouTube content around W2 to Freedom on YouTube as well. And I have a website, w2tofreedom.com.
Awesome. And I'll link all that in the description of this video so people have a way easier way to find you. Oh, well,
Awesome.
thanks for coming on today. This was great. And we're definitely going to have to do more of these videos.
Yes, sir. Thanks for having me, and I'm going to have you on the W2 to Freedom channel.